Hi, Diana.
Hey, me.
Welcome back to Simplifying Investing this week.
Thank you. I've been on holidays for 2 weeks, so what have I missed?
You didn't miss much, actually, because the US government is still shutting down at the moment. So they've been shut down for 2 weeks now, so we haven't really had any new data coming out of the US. We've missed 3 weeks of unemployment insurance claims. We didn't have an inflation reading. We didn't have an unemployment reading for the past month. So, well, everything is, wow.
Sort of, I suppose. There's been very little US data, which is good news if you're trying to update charts like we do all the time. So it's been good for that. But what markets have been absorbing instead is all the tariff news, which has been ongoing really in the past few days. It started on a Friday night, Australia time, where the US announced a potential additional 100% tariff on Chinese imports, which basically would have taken the average US tariff rate above 30%. We're currently at about 21%. So pretty much back to those Liberation Day highs. And it spooked markets. The S&P 500 fell by nearly 3% in one session, though we have had a bit of clawing back in markets because tensions have simmered down again between Trump and Xi, or I guess the US and China. Trump made some posts on Truth Social saying that we don't want to see China go into a recession or a depression, and the US, we don't want to see the US going into a downturn either. So I think he's trying to simmer down some of those concerns that tariffs are going to go to this high level. And Scott Bessent, the Treasury Secretary, has also made some more positive comments, even though initially Trump said he may cancel the meeting between him and Xi, which is meant to happen later this month, I think, in Korea. So I still get the sense that this tariff war or the threats of a really outsized increase to tariffs is still not likely to happen, despite these, tensions going up and down. Fundamentally, tariffs are going to be higher than where they were this time a year ago, but probably not at the Liberation Day highs of 30%. So I think the path for share markets is still to the upside.
So with all of this China-US trade war, tariff wars, I feel like I don't know where it's going to end still, because China does seems to have a bit of an upper hand. They control like 90% of the world's rare earths processing capacity. But then the US is a major customer of this whole supply of rare earths. They use that for their fighter jets, for their EVs, for everything really. So where is this going to end?
Well, it sort of seems like the export restrictions that China put in place on rare earths kickstarted some of these tariffs, although it's a bit unclear because we were looking at news reports that said actually it was due to changes in ship duties that China was imposing. So it is really hard to know, why all of a sudden we've had a flare up again in these tariff issues. But it does look like critical minerals or rare earths are going to be a really key part of whatever discussions Xi and Trump have around the future of what the China and US trade deal looks like.
One thing that I find quite funny after that, Friday tweets from the Twitter-in-chief Donald Trump is that gold actually gained massively. Just from last Friday, gold has gained 5%, and this is on top of that, 200% increase since the beginning of 2024, 60% year-to-date increase, and 25% increase just in the last 2 months. How crazy is that? I hope you bought some gold last year.
Well, we're not here to talk about my own personal investments, but I mean, it is obviously, it's what they're calling a debasement trade. So the trades into gold and into Bitcoin has really had an incredible run in the past 12 months, and particularly for gold. So that's that debasement theory, the theory that US exceptionalism is not going to continue, concern over the US dollar as well, which is driving gold prices higher. I mean, there's another mania that I actually did buy into on my holiday. I bought a Labubu for our listeners. You can see on the video here. It's actually my daughter's Labubu, but I took it today to work. But the Pop Mart share price has actually been going down. But anyways, it's just to say that people do jump on the bandwagon like I did with the Labubu. I didn't even think that they were very cute initially, but now I sort of think that they are really cute and nice. So maybe people are feeling like this with gold. They don't want to miss out, and maybe a similar situation with Bitcoin as well. But given that we are in a more tense geopolitical sphere, And there is genuine concern about how far US equities can rally. Maybe gold can actually continue to rise.
I think there's a similarity between this Labubu phenomenon and gold. And that is both actually has a big China question mark behind it. So with Labubu is from this Chinese company called PopMart. PopMart share prices, I know it's been falling lately, but it actually gained 600% in the last 2 years. So that's quite crazy. We made a video about this not long ago, and I thought PopMart is a good example of how Chinese soft power has gained in terms of popularity with the global market. Chinese shoppers traditionally always look to Western brands as a sign of premium brands, but things seems to be changing now. They seems to want to move away from that Western ideal of premium, and they're looking inwards instead. They're looking at Labubu, and this is a very similar thing to gold. So emerging market central banks, and especially the Chinese central bank, has been a net buyer of gold in the past 10 years. They seems to be diverting away from the US dollar as a safe haven assets or as reserves for their central banks. They have been buying gold instead. And that I feel like that phenomenon has spilled from central banks into the retail customers. Last week when you were away, there were huge queues in front of the ABC gold bullion from just mom and pop investors, really, just queuing on marketplace to buy physical gold. And I find that fascinating. I mean, it does make sense that people are buying gold as a geopolitical hedge, as you mentioned. Maybe they are hedging inflation as well, given that, inflation in the next, say, 10 years seems to be higher than what it was 10 years ago. So gold might be a good hedge for that. And yeah, maybe they just have this fear of missing out, either on Labubu or on gold. So we don't know if gold has more room to run given that massive record increases over the last, say, 2 years or so. But I feel like given that our theory is that geopolitical risks will remain quite elevated over the next few years, inflation is the same, and that fiscal deficit issues from different governments will be the same as well. Maybe gold still has a bit more room to grow from here.
Yeah. And on the geopolitical front, I mean, some good news actually this week. Trump is calling himself, the peacemaker in chief, and there were some, quite comical pictures of him with Peace 2025 at the summit in Egypt. But he did broker some form of a peace deal between Gaza and Israel, and that was his 20-point plan that he put out recently. I mean, I think it's still too early to say if this is actually going to be lasting peace, but his tactics of, being a tough negotiator, art of the deal type of stuff, and his non-typical type of way of dealing with his counterparts hopefully can actually form some sort of longer term resolution in the Middle East. I mean, the issue was not really causing markets too much concern, and I don't think that markets actually moved at all on this news, but it is good to see some form of peace for the people in the region. And in the short term, maybe it does remove some slight geopolitical risks, and it could even mean some potential peace deal between Russia and Ukraine, which could have some impacts on markets through the energy sector.
What a shame he didn't get the Nobel Peace Prize, though.
He may next year. It's still too early. I think he wants it.
Let's move a bit closer to home, to Australia. So Australia has been pretty quiet as well since you came back. I guess we did have some positive news earlier this week with this Division 296 proposal from the Labour government. Can you give us a bit of a rundown through that?
My favourite proposal.
Yeah.
So the Division 296 proposal was basically the one to have a higher rate of tax applied to super balances over $3 million and taxing unrealised capital gains, which hasn't been done before in Australia. And this was meant to start from the 1st of July this year, but it kept being pushed back. The policy didn't get passed because of a lot of feedback to the government, including from ourselves, that the policy was not designed in a way that would actually favour the average person in a few decades' time when they retire. So it was good news to see some changes to the policy. Basically now that $3 million cap, if you want to call it a cap, will be indexed to inflation.
Threshold.
The threshold, that's right. Balances over $3 million will be taxed at a higher rate of 30% compared to 15%, like you would usually be taxed for your super, and balance over $10 million will be taxed at 40%. So there is still going to be higher taxes applied to large superannuation balances, but it's not going to impact the average income earner who is going to retire in 40 years' time, unlike the other proposal would have, because it's going to be indexed to inflation. And I think ultimately, it is fair for the government to introduce higher taxes on large superannuation balances, because we know there is an inequality problem in Australia with the haves and the have-nots. We've seen an increase to our Gini coefficient, one of the broadest measures of income inequality, and super is a very generous form of taxation. They also introduced an increase to the listo. The government's sort of obsessed with these different terms in the tax system. First it was lamito during COVID, now it's listo. This is a refund tax scheme to give low income earners more back for their super contribution. So they increased the threshold to that, and that's going to impact about 3.1 million people. So the changes to the policy mean that the government's going to get less revenue than they had been expecting. But I think it's good news generally for the tax system. They're not going to tax unrealized capital gains either, which was a big concern. And it does provide a bit more clarity over people's savings into the future.
So speaking of inequality, I think a big part of that in Australia is definitely from the housing part of it, because again, it's the biggest part of our net worth, of our asset. From most households, 2/3 of us live in an owner-occupied households. We've had some updates from, I guess, the progress of how we're building houses in Australia today. So over the last 12 months to June 2025, we completed about 175,000 dwelling units. That's still way, way below the government target of about 240,000 dwelling units, according to the Housing Accord. I saw this number today and I thought, it's actually pretty sad. It's actually pretty disappointing, because building approvals have been running a bit higher than that. They've been running around 190K per year. So that's at least matching supply and demand dynamics here in Australia. But the number of buildings commencement, which are buildings, started to be built in Australia, that's lowered around 180, and completions are even lower than that. And I think the sadder thing is that the time it takes to build an apartment or a house in Australia, it has improved a bit over the last year, but it still remains very elevated, and it's still about 50% higher than what it was pre-COVID. So it does seem like this inequality problem is just not going to be solved anytime soon here. Because again, it takes longer to build a house. Even if we get our housing approvals, housing completions back up, it takes another few years.
I'm hopeful that the trend rise in building approvals that you mentioned will eventually see the completion numbers rise, but it is quite disappointing that ever since the Housing Accord was signed, that completions have actually tracked or been trending down rather than up. And if we continue to run these very high levels of net migration into Australia, we need to be able to house this new demand for dwellings. And this week we also had the arrivals and departures data, which gives us a good read into net migration from people coming on permanent visas and long-term visas as well. And those numbers are still running at really high levels. We could have net migration running at 400,000 again in the next 12 months, which is above the Treasury's forecast of about 335,000. And of course, there's nothing wrong with running levels of high net migration, but the fundamental problem in Australia is that we do have a big housing supply problem. So it just doesn't make sense that our supply and demand goals are not lining up.
Well, to be fair, I think the net migration or net population growth number is actually still a bit unknown for now, because that data is actually so lagged and it has not really correlated well with visa arrivals data lately. So I guess with everything in the market, it's still a little bit of an unknown for now. Thank you, Diana.
Thanks, me, and see you next time.